Hey folks, I hope you're doing fine. I'm Simo from Investment Research, and today I need to talk about what's happening with SoFi right now on November 6th, 2025. So looking at the trading action today, we're seeing the stock absolutely getting hammered, down 7.5% to around $27.82, and I need to walk you through what's driving this sell-off because it's not just some minor consolidation. This is a real move that demands explanation. In my view, the primary driver behind today's weakness is classic profit taking after an absolutely insane run in this stock. According to what we've seen over the past year, SoFi is up over 160% and just recently hit all-time highs near $32.57. So when you get that kind of parabolic move, you're going to see momentum traders and short-term players locking in gains. Based on the price action patterns I'm monitoring, this looks like technical selling rather than any fundamental deterioration in the business model. Now, according to my analysis of the recent earnings catalyst, the company just reported about a week ago and absolutely crushed it with record net revenue of $962 million and net income hitting $139 million for Q3. So this isn't a situation where the business is falling apart. Quite the opposite, actually. In my view, what's happening is the market had already priced in a significant amount of good news heading into that print, and now we're seeing the classic buy the rumor, sell the news dynamic playing out with a lag. According to the technical setup before today's sell-off, the stock had become extremely extended above key moving averages, and based on my conversations with technical traders in the space, the RSI was flashing overbought readings for multiple sessions. In my view, when you combine that technical positioning with the broader market environment we're in right now, you get these sharp intraday moves that shake out weak hands. Now, according to the institutional flow data I track, we're also seeing some natural rebalancing ahead of month end. And based on what typically happens in November, portfolio managers are taking risk off the table in names that have been big winners year to date. In my view, SoFi falls squarely into that category as one of the top performing fintech names in 2025, so it's natural to see some distribution at these levels. According to the insider activity patterns over the past 6 months, we've seen consistent selling from various executives, and while I don't think that's the direct cause of today's move, it does create a psychological headwind where retail investors see those Form 4 filings and start questioning whether insiders know something they don't. Based on my assessment, though, most of that selling appears to be standard diversification and tax planning rather than any bearish signal about the company's prospects. In my view, another factor contributing to today's weakness is simply the volatility inherent in this stock. According to the historical data, SoFi has experienced 39 moves greater than 5% over the past year, so in that context, today's 7.5% drop is painful but not entirely out of character for how this name trades. Based on the volume profile I'm seeing, we're running about 1.5 times average volume, which tells me this is real selling pressure but not panic liquidation. Now, according to the recent product announcements, including the Galileo Southwest Airlines debit rewards program that came out today, the fundamental story remains intact. In my view, these B2B infrastructure wins are exactly what the bull case is predicated on, so the disconnect between positive business developments and negative stock price action today is purely a function of near-term trading dynamics rather than longer-term value creation. According to my framework for analyzing fintech stocks at inflection points, you need to separate the signal from the noise. Based on the Q3 numbers, membership grew 35% to 12.6 million. Total products hit 18.6 million, up 36% year over year, and management raised full-year adjusted EPS guidance to $0.37 from $0.31. In my view, those are the kinds of metrics that matter over a 12 to 18-month investment horizon, not whether the stock is up or down 7% on any given Wednesday. According to the valuation debate that's happening on the street right now, bears will point to the fact that the stock trades at a premium multiple to traditional banks, and based on that comparison, they'll argue it's overvalued. In my view, though, that misses the point because SoFi isn't a traditional bank. It's a technology-enabled financial services platform with multiple revenue streams, including the high-margin Galileo and Technisys businesses that don't show up in conventional bank valuation models. Now, according to the macro backdrop, we're also dealing with ongoing uncertainty around the Fed's policy path and what that means for net interest margins across the lending industry. Based on my discussions with credit analysts, there's always this lurking concern about what happens to personal loan charge-offs if the economy weakens. And in my view, that macro overhang creates episodic selling pressure in names like SoFi, even when the company's specific fundamentals are solid. According to the analyst community positioning, the consensus rating sits at hold with a mix of 5 buys, 8 holds, and 3 sells, and the median price target is actually below where the stock was trading before today's drop. In my view, that tells you the street has been cautious on valuation even as the stock kept climbing, so today's pullback might actually bring the share price more in line with where sell-side models suggest it should be trading. Based on the cross currents I'm seeing, today's weakness is really a confluence of multiple factors: profit taking after a massive run, technical exhaustion from an overbought condition, month-end portfolio rebalancing, the inherent volatility in this stock, and perhaps some renewed macro concerns about the consumer lending environment. In my view, none of these factors fundamentally alter the long-term thesis that SoFi is transitioning from a lending company to a diversified financial services ecosystem with meaningful technology platform revenue. According to the upcoming catalysts on the horizon, the company is scheduled to present at the KBW Fintech Payments Conference on November 11th, and based on my expectations for that event, management should provide additional color on the technology segment momentum and perhaps update the market on member growth trends through October. In my view, that could be a positive catalyst to stabilize sentiment if the numbers continue to show strong execution. Now, according to the trading levels I'm watching, the stock found some support around this $27.80 area, and based on the volume-weighted average price over the past several sessions, there should be natural buying interest in the $27 to $28 range from investors who missed the initial move and have been waiting for a pullback. In my view, if we hold these levels and don't break down further, today's action will likely be viewed as a healthy shakeout rather than the start of a more serious correction. According to my assessment of the risk reward at these levels after today's drop, the setup is actually starting to look interesting again for investors with a 12-month time horizon. Based on the guidance management provided for adding at least 3.5 million new members by the end of 2025 and the margin expansion trajectory they're demonstrating, the earnings power of this platform is likely being underestimated by the market. In my view, that creates opportunity when you get these technical driven sell-offs that aren't rooted in any business deterioration. Now, according to the lessons from prior fintech cycles, names like this tend to be incredibly momentum driven on both the upside and downside, and based on my experience watching these stocks over multiple years, the key is distinguishing between price volatility and business risk. In my view, SoFi is experiencing price volatility today, but the business risk profile hasn't materially changed, which is why I'm not overly concerned about this move despite how painful it looks on an intraday basis. According to the path forward from here, I think we need to see the stock digest these gains and establish a new base of support before the next leg higher can commence. Based on the fundamental trajectory the company is on, with strong member growth, improving profitability, multiple revenue streams maturing, and operating leverage starting to show up in the P&L, the long-term story remains compelling. In my view, today's 7.5% decline is more about the technical and positioning dynamics in the stock rather than any meaningful change to the investment thesis. And for investors who believe in the transformation story management is executing, this pullback might actually represent a more attractive entry point than we had when the stock was making new all-time highs last week. Finally, I'd say most stocks are going through some kind of drop right now because of several factors tied to broader market tensions and ongoing economic uncertainty. The government shutdown has also affected multiple sectors. Hopefully things stabilize soon and we don't see SoFi fall back to its 52-week low before the end of 2025.